Hello and welcome to this Academia unit on mortgages for the self-employed. Let's start by having a look at our learning outcomes. They are how lockdown and COVID are having a range of impacts on the financial prospects for the self-employed, how mortgage lenders are responding to these, and what mortgage brokers can do to ensure the best long-term results for self-employed clients. And now let's meet our panelists. They are Steve Hewitt, who is National Key Account Manager at Aldermore Residential Mortgages, Elena Todorova, who is Associate Director, Property Finance at SPF Private Clients, and Andrew Montleg, Chairman of the Association of Mortgage Intermediaries. Well, those are our panelists. Let's get things straight underway. Steve Hewitt, how is the world of mortgages changing for the self-employed at the moment?
I think it's been an interesting 15 odd months since the pandemic started, when obviously everyone went into the sort of first lockdown, into a second and third lockdown, which has obviously impacted a number of people in that particular market. I think the challenges have all been around how they've been impacted or not impacted, or maybe even positively impacted over that period of time. So when you consider where those people have had to sort of either diversify themselves into other parts of their business, put people on furlough, or make people redundant, I think there's a wide-reaching part of that market, which is obviously at the moment either really made something of it over the last 15 odd months, where they've been able to sort of, diversify their business, actually continue to grow, whereas the other people that have not been able to have been sort of impacted. And even with the government support schemes in place, whether they've actually been able to receive those or not, and the bounce back loans, that it's very, very challenging for them in a world where, that's their business, that's their livelihood. And obviously the likelihood is they've got employees along the back of that as well. So I think it's been a challenge for the last 15 months, which has obviously generated a number of sort of challenges in terms of the lending space and also the sort of broker space as well, where how can they actually now look to support those people into this new world as we come out of this sort of lockdown period, and hopefully we start to get back to some form of normality.
Thank you. And Elena, as a mortgage broker, what are your thoughts on that?
Yeah, absolutely. I mean, it has been a very different environment in the last 10, 15 months, as Steve said. So we had the winners. Some businesses have done fantastically well. They have redefined their business models. They focused on their employees, on their plans. They embraced technology. And some businesses, unfortunately, have failed to do that and have closed doors. And some of them actually have closed doors forever. And that is reflected in some of the numbers of self-employed figures as well. So if we look at the peak of self-employment, we had something like, just over 5 million self-employed people. And in December 2020, that figure have dropped to about 3.2 million. I mean, this is massive. It's about 1.8 million people. And we have managed to recover. These numbers have come up a little bit. So we have 4.3 now, I think in beginning of May, which is quite encouraging. Whether some of these people have come back to the same industries that they used to be before, in the same businesses, that remains to be seen, but many of them have redefined how they want to work, what they want to do, etc. So the fact that the figures have come up shows that the resilience of the workforce. People are inventive, people would like to work, and they're just not, just staying on the sidelines, basically. And that has, of course, reflected in our position as a mortgage broker, how we look at self-employed people as well, how we look at their business model, at their accounts, and their income, capitalizations, and so on. So it's been an interesting learning curve for us. We had to be much more detailed about how we assess a self-employed application.
Well, let's pick up on that. Monty, you're a mortgage broker as well. So how do you, when you're looking at your client base, what's the challenge between thinking about the short term, what people are needing to do to survive at the moment, and the long term of how viable their business is once things like furlough and all of this government support, or potentially this government support, starts to fall away in the next few months?
It's an interesting one. We have seen a massive seismic shift in the way people are working, especially through lockdown. And a lot of it depends on the industry that they're in. Obviously, we've seen more challenges in travel, in the entertainment industry, in that type of industries. So when we're assessing a client, it's really trying to understand what position were they in, what was the effect of COVID, and whether that effect is going to have long-term ramifications. And actually, in a lot of instances, and we see it all around in terms of different things that happen throughout the time, is that businesses go through different things and they restructure, they reinvent themselves. And a lot of businesses have actually taken this time to actually come out of this in a lot stronger position. So maybe they've got rid of some of their cost base, they've reduced overheads, they might have reduced some non-essential staff, and they're actually starting to come out the other end. So what we're looking at is how the businesses are adapting and making sure that actually, if they've taken government help, it doesn't necessarily mean that they're in trouble. In a lot of instances, I would say, actually, if you're getting government support or there's an offer of a civil loan or something like that, then actually it's prudent business sense to actually take that. And if you don't need it, to just have it in reserve. You can always pay it back whenever. And actually, that's prudent business sense. And the problem we've sometimes seen is that some lenders are taking that as a sign that just because you've taken support, just because you've received a grant, it means you're in trouble. And that doesn't necessarily mean that. So we try and assess the whole thing, past, present, and future, in order to make sure that we're giving the best advice and putting them to a lender with a complete story of how they're going to survive and how they're going to go forward. So it makes the underwriting decisions a lot easier.
To bring you in on that point, what sort of you obviously sit there with your clients and you're working with them each individually. It's very bespoke. Put your thoughts together. You go to the lender. What's your experience been on the whole of lenders in the last?
Yes, it's interesting. So every lender has adopted a different policy to start with. Some lenders have automatically reduced their income multiples or loan-to-income ratios. They've decided anybody who is self-employed, doesn't matter what they do, doesn't matter what industry they are, we're going to raise maximum 80% of the normal loan-to-income ratios, which of course sounds unfair, and it is unfair, and unfortunately still continues in some instances. Some of them have reduced income multiples, some of them reduced loan-to-values even. So some lenders have decided they're not going to lend more than 75% loan-to-value on a particular property, and so on. But on the positive side, we have some lenders that have adopted. They have taken this a little bit more bespoke approach. And as Andrew says, it doesn't have to be a bad thing if you have taken a CBIL loan, because what is the purpose of it? We need to look at the details of it. And many businesses have taken the view, taken the loan, invested in the business, opened another bakery, invested in the infrastructure, invested in technology, or just simply have it as a cushion there. So when they say, when we see how COVID goes, if we don't need it, we're just going to return it, because it's typically low interest rate, and the terms are very favorable for businesses to take. So I think there were some numbers. I think at the end of last year, there was something like £40 billion of loans that have been taken via the various loans. That's a thing until phase 3. And these old money, they either have been invested, some of them back into, they have gone back into the economy, or people are just using and sitting and using them as a cushion. I think quite a bit of that. So, but from a lender's perspective, we do have the good and the bad guys, and I think things are improving slightly slower, but lenders are rethinking, and they should rethink about how they assess the self-employed applications.
Steve, what are some of the things that you need to think about generically as a lender? The risks, the potential rewards, bespoking versus having a fairly sort of ironcast process. How do you think about that?
I think Elena's made some really good points there in terms of what's happened over the last number of months now since all this took off. I mean, even before this, we know that lenders were sort of quite stringent around their self-employed and their criteria and what they would actually lend them. I think this has really sort of opened up that piece around how do we go out now and support those self-employed clients, and to support the brokers, the intermediaries out there who have got those clients that potentially, like I said before, have been impacted, not impacted, or I'll say positively impacted. I think when you look at the lenders when all this took off, it was almost like, well, actually we'll shut the doors, we'll pull away, we'll only lend up to 60%, we need 3 years self-employed income, we need this, that, and various lists of information that's required. And over that period of time, obviously lenders have started to adapt. And I think that the challenge with some of the high street lenders is in around the fact that they haven't got that sort of specialism. They haven't got that kind of underwriting where, it's an automated process. They don't have the systems in place. They don't have the human being where they're able to support the sort of customers' hopes, dreams and needs in terms of what they're looking to do and try and help them get onto that property ladder, help them remortgage, or they, like you say, they're looking to raise capital to support their business. And when we consider the sort of process that lenders are sort of going through at the moment, you're absolutely dead right, Alina, in terms of it's really sort of, it's sort of back to basics in terms of what do we need to do right today to support those clients. In terms of ourselves at Aldermore, we never shut the doors. We continue to trade all the way through and support the mortgage intermediary market all the way through. Yes, at that point, most lenders pulled away. Most lenders sort of tweaked their criteria to support the sort of the needs at once at the time in the pandemic. However, we've slowly but surely come back into that space. We never really moved away. So if you consider where we are as a lender today for self-employed, we're looking at, you're talking loan to income and various things like that. We will allow up to 5.5 times income for somebody who's earning over £50,000, whether that's a single income or joint income. When you look at the LTVs that we're lending up to at the moment, we'll actually lend up to 90% for a self-employed applicant. So yes, we have to understand that business and we have to understand the needs and wants of that company. And obviously, Alina and Monty obviously here today will present that to us in a way that we will know what the past has been, what the current is and what the future is likely to be. So we do need that story to understand that particular self-employed person's hopes, dreams and what they're looking to do going forward. So that's where we need to sort of assess, and lenders really need to come to the fray and sort of bring that approach forward rather than sort of leaving it now till 2, 3, 4 months down the line when we know we've got the end of the stamp duty tapering off it towards the end of September. We know that people who took a deal 2 years ago are starting to come to the end of that 2-year product. They're going to want support from the likes of Alina and Monty to be able to sort of either remortgage, whereas it may not be the only option for them to do a product transfer. Yes, it seems a simple option, just do a PT with that current lender. It's an advice piece. That's what Elena and Monty are paid for. It's the fact that they need to give that advice to that customer, and it needs to be the right advice, not just doing a product transfer or not just doing a remortgage. It's got to be absolutely right.
Okay. Well, I want to pick up on that point around sort of bespoking versus process, because you mentioned underwriting. Monty, when you're, as a broker, when you're looking at potential providers, how much time do you spend thinking about underwriting resource? Any good rules of thumb on what constitutes good underwriting resource in a case like this?
It's all about relationship and communication for us, basically. So, you do have the likes of Aldermore and some other specialist lenders who've really come to the fore in this type of environment where you can talk to underwriters, where you can discuss cases, where you can explain what's going on behind the scenes. And that's really important. Some of the mainstream lenders, they're more set up for a factory type approach. As said there, basically they don't have the specialist underwriters who are going to take the time and go through the accounts and really get under the skin of the borrower to understand their business. And that's really, really key. So we definitely take that into account when we get a case in and when we talk to a client. It's not just about actually cheapest, we're going to go there because they're the cheapest. It's actually understanding which lender is going to be best placed to serve that customer. And that's really, really important. And that's first and foremost in our mind, which is the best place. I've always believed in putting square pegs in square holes, really, not trying to bash it into somewhere else where it doesn't work. So we do that first and foremost, which client fits with this lender. And then we look at the stuff around that. So what is the communication like with that lender? Can I speak to the underwriter? If it's a tricky case, do I have those lines of communication? And that's really, really important. And actually the price, the cost of that comes a little bit further down the line. But it's all about putting the right applicants with the right lender and really understanding each lender's underwriting process and their criteria really, really well. You
mentioned the importance of communication and dialogue there, Monty. Can you give us an example of where that's been really valuable? Just, I mean, obviously you've got your own client base, but something just suitably generalised as to where being able to be on the phone, have a named individual, has made a big and very positive difference.
Yeah, I mean, there's loads of examples really with various lenders, and it is all about actually being able to pick up the phone and talk to an underwriter. And that's made some really good differences. We had one not so long ago. Someone wanted to buy a £700,000 family home in North London, and they were a self-employed consultant, just finished their first year of trading, owns a business limited company 50-50 with his wife. And the first year of trading proved it was really successful. Second year was a little bit affected by COVID, but actually the plans in place and what they had done means that we could pick up the phone to an underwriter, actually speak to them about it, provide all the documentation that they asked for, work with the accountant to get some projections, and actually that case went through. So you're actually helping real people just because you can pick up the phone and discuss that case. And I'd like to see more of that. And the specialist lenders like Aldermore have been excellent at that. And I'd like to see more of that, even to the point of potentially the underwriter actually speaking to the client directly, to really sort of old school, the way we used to do it back in the day, when actually you'd have those interviews with those clients. And I think that really, really helps to get a picture of the applicant and that person. So that's just an example there, one case of many where it actually made a difference being able to talk to an underwriter.
And Elena, is this a point where the difference between cost and value in product has really become apparent?
I mean, absolutely. I think Andrew here illustrated a great case where you can actually, with the help of the broker, you can achieve the value. And what is the value that you perceive at the end of the day of the process? You'd like to buy this property. And if you approach a broker, a good broker will have access to many lenders. I mean, typically on the market, there's about 100 active lenders at the moment. Meaning the broker should keep themselves all the time updated with any information, criteria, access to various underwriters, access to business development managers. And as you know, Aldermore is a perfect example of that. For example, where you can speak to the underwriter, you can speak to the business development manager, discuss cases with them. And this is where you can add value to the client. Because many clients come to us and say, well, I'm not sure whether you can help me. I think probably you can't do anything about it. And it's really nice to actually look at their circumstances and say, actually, I can see a solution to that. Let us work on it. Let us, help you to buy a home. What is best in that, really?
But is it becoming a tougher job for you at the moment, Elena? Given this high level of uncertainty that we're going through? I
think it has been challenging, but I think brokers, are very resilient. I think we learn quickly. And with the support of the lenders, with support of the BDMs and underwriters, we get there. We know, as Andrew just said, is basically when a client comes to you, we don't try to fit, a round peg in a square hole. We have a good idea with our experience. We have a good idea about what lenders are likely to take a look at the case like that. So that helps us to speed up the process. And I think, having access, having quick responses from the lenders will enable us to do that. We have our business model, so we know how to draft a proposal. We know what is required. We know how to propose, suitably a case to the lender so they can easily make that decision as well. That's important to have all the facts and figures from the client, so the lender is more secure, more confident when they come back to us and say, yes, we're happy to lend, and we have that initial decision even before underwriting, before the actual application, to give that confidence to the client. Mr. and Mrs. Client, this is what it is. We have a yes from the lender. Let's go ahead with the application.
And Steve, from your perspective as a lender, how much have you had to flex your model, given the environment that we're in at the moment, and how much has it been your model? Would you argue your model's always been flexible, and circumstances just change a bit?
It's a great question. I think when I think back to when I joined Aldermore back in 2010 when we launched, the whole purpose of Aldermore was to be there to support that disenfranchised client bank of people that customers and the brokers were being struggled and challenged with in terms of high street and the credit scores and the computer says no. We've always had that sort of ethos of trying to say to people, look, we're here to support and help you and actually write that piece of business. But I think if you look at what people have done over the last 15, 16 months around, the word flex is what you use. I think when you consider where the underwriting piece is at the moment, we're very fortunate that we have underwriters. We have people who are able to look at accounts, understand the accounts, read the accounts, listen to what the broker's got to tell you. The way that we process the business, yes, whilst it's over the internet through a portal, there's the ability there to upload the details, the story. We need to understand that client's details. So it's all around that sort of communication. So it's almost like what Monty needs and what Alina needs is actually not a checklist, but it's almost saying to people, look, this is what we now expect. This is what we're looking for. These are the sort of questions, because the worst thing is, and Alina, Monty, you probably agree with this, is the fact that lenders have a habit of sort of going back after the initial sort of application or decision in principle and say, can you send us this? Can you send us this? And there's nothing worse than having to go back to your client and say, the lender wants this now, the lender wants this now. And you sort of 3-4 documents down the line. We need to be a lot clearer as a lender up front to say to the likes of Monty and Alina, saying, look, this is what we're going to need from your clients. They can have that upfront conversation. We're not talking about flexing here, we're actually being more, communication is the key here. So we're saying to them, these are what we need in terms of that particular case, rather than Monty and Alina spending another hour or so trying to get hold of the customer, trying to get the documentation over, uploading it, which means further delays. So if we can be more clear and precise around what we need up front on that particular case, then it's going to make a whole heap of difference. The client's not going to come back and go, what are you asking for that for? Why are you asking for that? So I think it's giving those tools. So like Alina and Monty and other intermediaries out there say, this is what we need on this particular case. And Monty's spot on, so is Alina. It's that conversation with that underwriter. The dip comes in, they get the application in, they get the phone call from the underwriter to the broker saying, look, this is your case. We're going to talk through it. We're going to walk through it. We're going to say, this is what we need to support that in terms of the documentation. And the shopping list is what it generally is referred to. That's where we need to get to in being able to help them understand what they need, rather than this to-ing and fro-ing and going back to the customer all the time. Because you know what it's like. You're on hold. You're waiting to get somewhere. It just feels like that pushback all the time.
Let's pick up in terms of the timing to get business through, Monty. What's your experience? And assuming everything goes well, what kind of time frame should you be looking at to get a mortgage for somebody who's self-employed through a system? How do you manage your clients' expectations on that?
It's a bit how long's a piece of string sometimes, because it does depend on the case. We monitor all lenders, actually, their average time from application to offer. And we monitor all our brokers as well in terms of them, because a lot of it is how we package. And the broker has a responsibility to package the case well in the first instance. And that first packaging part is really, really important, because that really helps the lender. So we used to say, on average, it's sort of 2 to 3 weeks from application to offer. It's sort of where we ballpark what we used to say. Obviously, things have changed now, and we saw some lenders actually, especially on the self-employed side, mid-lockdown, really, really struggling, especially with self-employed. It had to go to a specific person. Each case was assessed. And that really went out to sort of 4 to 6 weeks in some cases, just from application to offer. We're seeing it improve again. But it is about packaging. It is about, as Steve said, it's about making sure we send the documents out, making sure we sell the story. And I like nothing better than to write a few paragraphs about the client and the story and the business and why they want to borrow what they want and how they're going to pay it back, et cetera, et cetera. And if you get that right, and then you get the shopping list back from the lender and you're able to tick off all those things and get them relatively easily, then it shouldn't take too long in terms of that. So you still, probably it's out a little bit, maybe 3 to 4 weeks if you're self-employed, you might say. But it's all about managing the client's expectations and understanding what their drivers are and what their deadlines are. And then actually looking around and, as I say, monitoring the service of different lenders as well, and really managing those clients' expectations through.
You sort of give the impression that, I think all of you, that a lot of lenders sort of stopped for a bit and thought, hang on, what's happening here? You know, processes slowed up. For you as a broker, would you say, actually, I'll give everybody a free pass on that? These are extraordinary circumstances. Everybody froze for a bit. You know what? Once they got their heads around it and started to improve, I'm happy? Or do you look at that as a broker and say, do you know what? There was a big test there, and I think a number of people just failed it. It really highlighted the people that can't provide for me and my clients.
Right. And let's get one thing straight. This was a fundamental event that we have never, ever experienced before. On the whole, lenders were fantastic. They all of a sudden, they were thrown into this. You also had the mortgage payment holidays, not holiday, hate that term, the mortgage payment deferral scheme, which came out, and lenders were inundated with calls. I mean, I heard tales of some lenders getting 15, 20,000 calls a day just on that alone. For them to actually respond the way they did was magnificent. So that all of them magnificent. Where we started to question them was when we were maybe 9, 10, 11, 12 months down the line, and there hadn't been, some lenders were quicker in improving than others. And that's where you would start to question them. But that first initial period, they were amazing. And to deal with all of that, to deal with all their staff suddenly working from home, you know, you in the office, if you've got a team of underwriters on high-speed internet, 2 screens, bouncing questions off each other, suddenly you're working like I am now, kitchen table, kids running around, dodgy internet connection. It's going to be hard. And I think we all as brokers supported lenders through that. And that's what made me, you know, proud to be chairman of AMI, is that the brokers and lenders all came together, worked really well together, supported each other for the good of the clients. It's all about how they reacted at that time, which shows what a great industry we are.
Well, on that sort of point around technology that Monty touched on, I mean, how transformational has this period been to the use of tech in the industry? What sort of pointers does it give us to the future?
Yes, just to add to Andrew's compliments to the lenders and brokers working together, has been extraordinary time. And suddenly everybody started working from home, but also we were met with the unprecedented demand as well, because mortgage market picked up. So it is a combination of factors, and you have bounce locks, you have payment holidays, you have all this mix, you know, with this one weird and wonderful mix that you have to try and make sense of it. And we have, in terms of technology, we have something that I think everybody is talking about it, but some people have used it, some people have not. And it's open banking, which have slowly been introduced in our lives as well. And open banking is the thing of the future, basically. It's something that we all have access to it one way or another, whether it's via our normal bank accounts. When you open your application with Barclays, and Barclays says, oh, by the way, if you have any other accounts with other banks, would you like to bring them in? So next time you can see all your accounts in one place, or whether it's going to be a mortgage applications when the client is in control about how much information his lender potentially can request, but a lender can potentially apply to see information in business accounts, in personal accounts, you know, the credits coming in. For example, some of the lenders require for self-employed person to see 24 months worth of business bank statements. You know, for somebody who is running a business at the moment, trying to collect 24 months worth of business statements and send them and be interpreted by the broker and then sent to the lender and being explained, I mean, Monty, 3 to 4 weeks, as he said, and this is an improvement from last year, is going to be probably double. So open banking allows the lender to have access to that with the client's permission, so client in complete control, and have access to the information there quicker, faster, safer, and safer for everybody, safer for the clients, safer for the bank as well.
Steve, do you see open banking being transformational for the business?
I absolutely agree. I think it's a great tool that can be used by all lenders, to be fair, and you know, it's like anything, isn't it? It's uptake. It's people having that to say, actually, yes, I want open banking, and without that, they're not going to be part of it. So it really comes down to people and the uptake, and it's how we can sort of help and support that in the industry to say, look, you know, if you're talking to your client, it's asking them the question, have you got access to open banking? That'll make a life a lot easier. Lenders will still need to adapt to that in terms of how they underwrite the cases and get that information out of the systems. There's a big piece of work, but it's also down to the individual, their customers, their clients, to actually have open banking to make it work, because without that, it's not going to work. So it comes down to that sort of age-old thing again, isn't it? Saying we need it in place, but unless the uptake's there on the whole, or the majority take it up, then lenders are going to have to revert back to that sort of manual process of saying, can you send us these documents and bank statements and everything else that we need to support and information, pay slips. Yes, there's still going to be information that's needed, but it really is down to uptake.
And now fingers crossed, we're heading towards the end of lockdowns. Touch wood. For your business, Steve, are you planning on getting everyone back in the office? Do you see has a much superior decentralized model emerged? I'm just thinking, because so much of this is around service and communication.
It's a great question. You know, we're here today. You know, this is the first trip out for me, if I can say that. That, you know, since the 20th of March last year, this is the first time I've been to London since that date. You know, it was quite strange getting the train down here yesterday to sort of say, you know, I'm going to do a physical event and see human beings for a change instead of looking over the screens. I think when you look at the overall business, and not just Aldermore, there is that sort of rule of thumb around that hybrid working, where people spend 2 days in the office, 3 days in the office, 2 days working from home, which will really help and support their sort of mental health being, the well-being, and making sure that, you know, the employer is getting the most out of that employee. In terms of whether Aldermore have any plans to get people back in the office, we already have critical staff working in our offices, obviously socially distant and with the maximum capacity currently until the restrictions change. But after that, we will probably go down to that sort of route of sort of the hybrid working model, where people will be able to work from home and also come into the office.
Okay. We are almost out of time, so I want to end by getting a final thought from each of our brokers. Just one thing that you have learned from lockdown that's not just helpful to lockdown, but for business longer term as well. Elena, let's come to you first.
I think it's diversity, basically. It's just learning to appreciate individual business, looking at your clients, looking after them better. And in terms of where we're going forward, I mean, there's definitely demand and the need for a bit of a traffic light approach system in terms of underwriting, direct access to underwriters, bespoke solution. And bespoke doesn't mean necessarily just the private banking type of client, but a type that Steve and Andrea also touch upon. So that's the scenario going forward, just looking at and then understanding clients' business better.
Monty, a final thought from you.
For me, it's about 3 words: communication, support, and partnership. So the communication, I think, has been, we've all had to learn a different way of communicating, which has actually worked pretty well. And I think that's been really good. The communication between lenders and brokers, between brokers and clients has improved a lot through this. And I think we take some lessons out of this going forward. Supporting not just our clients, but supporting each other within the industry, and definitely supporting our staff, supporting the people who work for us in terms of their mental health. And then the partnership. We're a fantastic industry, but we really are stronger together. And where the broker-lender relationship works, that is brilliant. And that's the best, not just for the industry, but also for the clients we serve.
We have to leave it there. Andrew Montlake, Elena Todorova, and Steve Hewitt, thank you all for joining us.